In this video, I'm going to talk about the cash book. So what is cash book? A cash book is a prime entry book in which cash receipts and cash payments are recorded. We know that there are 8 prime entry books that we use commonly in accounting. The cash book is one of the main prime entry books out of these 8 books. Remember, we record only the cash transactions in the cash book. There are 2 main cash transactions, cash receipts and cash payments. What are the sources of cash receipts of a business? The business receives cash from owner's capital, borrowing money, cash sales, cash received from debtors, cash receipts from income sources, etc. Then what are the examples of cash payments that a business makes? Cash drawings, settlement of loans, cash purchases, cash payments to creditors, cash payments made for expenses, and also cash payments made for purchasing non-current assets, etc. So remember, the cash book is used to record cash receipts and cash payments of the business. We know that there is a specific source document for each type of transaction. The source document of cash receipts is the receipt. And the source document of cash payments is the payment voucher. So cash receipts are recorded using receipts and cash payments are recorded using payment vouchers in the cash book. Moreover, the cash book is not only a prime entry book but also a ledger account. Therefore, the cash book performs a dual function. This means it performs as a prime entry book as well as a ledger account. Okay, now let's get to know about the format of the cash book. Since the cash book is a ledger account, it has a debit side and a credit side. The debit side is on the left side and the credit side is on the right side. There are 6 columns on each side. It contains the columns of a ledger account, the date, description, a ledger folio, and the value columns. And also it contains 2 columns to record the serial numbers of the source documents. Therefore, on the left side of the cash book, there is a column to record serial numbers of receipts. And on the right side, there is a column to record serial numbers of payment vouchers. Moreover, there are 2 columns to record cash discounts. The left-hand side column is used to record cash discounts given by the business to its debtors. And the right-hand side column is used to record cash discounts received by the business from its creditors. And remember, these two cash discount columns are also called memorandum columns. These two columns serve only the purpose of a prime entry book, and these discount columns do not serve the purpose of a ledger account. Therefore, in these columns, we only record the value of the cash discount, and it is not a part of the double entry. Okay, now let's learn how to record transactions in the cash book. We already know that the cash book is a ledger account. Precisely, it is an asset account. This is because the cash book represents the current asset called cash in hand. Since the cash book is an asset account, it follows the double entry principles of asset accounts. According to the double entry principle, the increase of asset is a debit entry and decrease of asset is a credit entry. The cash receipts lead to increased cash. Cash is an asset. Asset increase is a debit entry. Therefore, cash receipts are recorded in the debit side of the cash book. On the other hand, cash payments lead to decreased cash. Decrease of assets is a credit entry. Therefore, we need to record cash payments in the credit side of the cash book. So, cash receipts are debited and cash payments are credited in the cash book. Transactions such as capital introductions, obtaining loans, cash sales lead to increased cash of the business. So we need to record such transactions in the debit side of the cash book. Then the transactions such as cash drawings, settlement of loans, cash purchases lead to decreased cash. Therefore, we need to record such transactions in the credit side of the cash book. Okay, let's take an example. The following transactions occurred during the month of February in Amar's business. Prepare the cash book and balance of as at 28th February 2021. Okay, here we are going to prepare the cash book of Amar's business for the month of February. Now, these transactions do not involve any cash discounts. Therefore, I'm not going to include cash discounts columns, the discount received column and the discount allowed column. Okay, the first transaction is 1st of February 2021, capital invested 200,000. This is a cash receipt. Therefore, cash increases due to this transaction. So we need to debit this transaction in the cash book. So let's record this transaction in the debit side of the cash book. The date 1st of February, receipt number is 01, and for the description it's capital and the value is 200,000. Right, then the second transaction on 4th of February, obtain a bank loan 300,000. Okay, this is another cash receipt. Therefore, cash increases due to this transaction. So let's debit this transaction in the cash book. 4th of February, receipt number is 202 and description bank loan, the value is 300,000. And then the next transaction is on 5th of February, purchased stock of goods, 50,000 rupees. Now this is a cash payment. Because of this transaction, cash decreases. Therefore, we need to credit this transaction in the cash book. So let's record this transaction in the credit side of the cash book. 5th of February, voucher number is 001. Description purchases and the value is 50,000 rupees. Okay, now let's look at the next transaction. 7th of February, purchase equipment, 100,000 rupees. Now again, this is a cash payment because business has to make a cash payment to purchase equipment. So cash decreases due to this transaction and we need to credit this transaction in the cash book. 7th of February, 002 and equipment 100,000 rupees. Okay, the next transaction is 10th of February. Sold stock of goods 70,000 rupees. Now this is a cash receipt. Business receives cash from the cash sales. So cash increases, therefore we need to debit this transaction in the cash book. 10th of February, 03 is the receipt number, sales, and the value is 70,000 rupees. Then on 11th of February, sold stock of goods on credit, rupees 80,000. Do we record this transaction in the cash book? No, because this is a credit transaction. It's not a cash transaction. So we are not going to record this in our cash book. Then the next transaction, 14th of February, received commission income 20,000 rupees. Now this is a cash receipt. So cash increases. So we need to debit this transaction in our cash book. 14th of February, 04, the receipt number, the description is commission income, then the value is 20,000 rupees. Right, then on 15th of February, purchase stock of goods on credit, 6,000 rupees. Now, again, this is not a cash transaction because it's a credit transaction. Stock of goods was purchased on credit basis. So we are not going to record this in our cash book. The next transaction, 18th of February, cash drawings by the owner. Here the cash decreases, therefore we need to credit this transaction. So on 18th of February, 003 is the voucher number, drawings, and the value is 10,000. Okay, the next transaction, 20th of February, received 50,000 from a debtor Sahan. Here again, it is a cash receipt. So cash increases, therefore we need to debit this transaction. 20th of February, the receipt number is 5. 05 Sahan. Within brackets, let's mention as debtor and the value is 50,000. Then the next transaction, paid to a creditor Ashan, 60,000 rupees. Now here it's a cash payment. Cash decreases due to this transaction. Therefore, we need to record this transaction in the credit side of the cash book. So 25th of February, voucher number is 004. Description, Ashan, within brackets, let's say creditor, and the value is 60,000 rupees. And then the final transaction, 28th of February, paid salaries. Again, this is a cash payment. So cash decreases. So let's record this transaction in the credit side of our cash book. 28th of February 005 is the voucher number and salaries. The value is 30,000. Okay, now we have recorded all the transactions. Now it's time to balance this account. So first of all, let's record the balance brought forward and then the totals, the lines for the totals. Then let's take the total of the debit side. 200 plus 300, 500, plus 70, 570, plus 20, 590, plus 50, 640,000. And then we need to find the total of the credit side. 50 plus 100, 150, plus 10, 160, plus 60, 220,000, then plus 30, 250,000. Then we need to deduct the total of credit entries from the total of debit entries. So let's deduct 250 from 640. So we get 390. Now this is our balance. So let's record the balance. Balance CD 390,000, and then we need to forward our balance to the next month. So it's on 1st of March. Balance brought forward, balance BF, and it's 390,000. See you in another video. Don't forget to subscribe.